As I explained in technical terms that maybe you have seen already, an enterprise might experience several rounds of venture capital before it finally goes to IPO. So therefore, here comes the data shows the different stage of venture capital performance in the first quarter globally. So first one is the angel and seed stage deals. So for the details about the explanation of each stages, maybe you can find in the technical term. So I will introduce only briefly. So the angel and seed stage rounds, including angel, pre-seed, seed, and subset of rounds below a certain threshold. In the other word, these investments go to the young startups. So approximately $3.3 billion was invested across 4,896 deals in the first quarter in 2020 in the seed stage deals. And it is very significantly that it is the lowest amount invested in seed stage rounds for the past 2 years, with the largest drop at 27% in dollars invested quarter over quarter. And very similar with the seeds and the angel rounds condition, the earlier deals also experienced the decreasing. Counts the amounts also down across the board, with the most significant drag on quarter-over-quarter dollars invested down by 23%, making the lowest record quarter since the fourth quarter of 2017. Yes? Is it okay? So I will continue. To add up, early stage deals include Series A and Series B and a mix of undisclosed venture rounds below a certain amount. In the first quarter, $22.3 billion was invested across 2,117 deals. So you can see while the rounds become bigger, the amount will become bigger in the general. Later, let us see the late-stage deals performance. Late-stage deals include Series C plus rounds, as well as a subset of larger non-designated venture rounds. Comparing with other rounds, when enterprises already experience several rounds of venture capital, it will become more mature and stable. So when an enterprise becomes more mature and stable, it already enjoys a better bearing capacity towards the external changes. So in the first quarter, totally $36 billion was invested across 502 deals in the first quarter. This is down quarter over quarter and marginally up year over year. So as I briefly introduced before, as my personal research is more concentrated on the startups in China, therefore from now on, I will introduce some information about the venture capital market in China under the impact of COVID-19. So as we all know that the COVID-19 affects China since January in 2020, so the first quarter's data is very typical. In fact, the peak of the Chinese venture capital market was in 2018, which very clearly shows in the left figure, which shows the total equity investment and financing in the average financing amount in China since 2015. So, which also clearly shown that the equity investment and financing transactions tend to become since 2019. Therefore, due to the holidays and the COVID-19, the total equity investment and financing was only about 241 billion RMB yuan, but the average financing amount was as high as 360 million yuan, the highest level since 2015. So it is also need to mention here, in actually, a venture capital round might take several months of negotiation. Therefore, the high average amount not only represents what happened after the COVID-19's performance, but also partly affected by the performance at the end of 2019. The market massive effect is prominent here. So in short, what is massive effect? Which means the stronger will be stronger, while the weaker will remain as weaker. For the reason that the stronger is easier to accumulate resource. If we further look into the Chinese startups' huge equity and investment financing transactions in the first quarter in 2020, we will more easily find out that big and major startups are attracting more attentions. So here I list 3 representative huge transactions in the first quarter, and 3 startups are all from different fields. The first one is Zerong, which calls Zirong in Chinese, and it is a platform providing residential products and service. So the rounds it experienced in the first quarter is a strategic technology growth investment. It's except from the ABCD rounds is a round whether the company has some technological growth. It can ask some investment companies, investors to investing in this company. And for the amount of the financing is about $10 billion, and it's done in this March, and the main investor is a SoftBank Vision Fund. And another one is Yuan Fudao, and it's an online education platform which benefit a lot in this COVID-19 situation, and is also a very major company already. It is experiencing its G round of financing with the amount of $10 billion, and also is done by the end of the March. Another one is called Pony AI, which is a self-driving vehicle system. So it's an AI company, and maybe you are not familiar with it. However, it is the first applicable AI self-driving vehicle systems in Silicon Valley right now. So it's experiencing its B round financing, venture capital financing, and that's the amount of the $462 million done in this February with the main investors of Toyota Group.